Hello and welcome to Business Today TV. You're watching our Diwali Special Market Masters. Plan, profit and prosper with Business Today TV this festive season. Today we're joined by Siddharth Zarabi, Group Editor Business Today, and our special guest, Raamdeo Agrawal, Chairman and co-founder of Motilal Oswal Financial Services. In this conversation, Siddharth and I will be discussing with Raamdeo the year gone by, the top performing sectors, and how you can build a winning portfolio for Samvat 2082.
Well, that's right, Aabha, and a good morning to all our viewers. Raamdeo bhai, welcome to the show. It's very clear that the Samvat that's gone by has been a challenging, volatile year, all manner of uncertainty, global macro developments, tariff shocks, and of course, what's happening in our market as well. Uh, Given all of that, what should investors be looking forward to in terms of the new Samvat?
So first, my best wishes to all your viewers and your team. Very happy Diwali in advance and a great investing year and investing decade, I would rather say, because investing is not about a year or two. It's a journey. You create wealth on the way, and that has what has happened. Last year has been a very interesting year because it started with a lot of promise, and I think if you look at the index, I think probably it's flat. It's just about flat in the sense that 0.5% or 1% higher than last year, 12 months if you see. So we are at kind of a consolidation phase. Year before was about 12-13%, and 1 year even before that was another 12-13%. So my sense is that despite everything in terms of geopolitical and whatever corporate challenges were there was a slowdown in between post-election and things like that. We are coming out of it, and government agencies are trying their best to come out of it, and not only come out of it, but actually give the major boost to the consumption and so-called animal spirit in the system. So both the regulators, whether it is SEBI, whether it is RBI, government, fiscal as well as monetary, I think from all kinds of things we are seeing push. So I would think that growth will resume, particularly in the earning side, and hence the year of looking forward 25-26, that should be a much more optimistic year than what we had in the last 1 year. So I would remain optimistic for next 1 year and even more optimistic on a 3 to 5 year basis.
Right. Ramdev, I want to go a little deeper on that. You've often spoken about projecting a 12 to 15% CAGR for Indian equities over the long term. And as you just mentioned, there are key structural levers we're looking at: demographics, productivity, capital formation, reforms. So when you're looking at the broader picture, where do you see the greatest push and where do you see the greatest risk of disappointment? Currently, we're also tracking global risk factors at this point of time, which are keeping everyone on their toes. What kind of margin of safety perhaps should investor be building in to their expectations?
Yeah, so basically, there is a lot of noise about the, what you call, geopolitics and all, which is beyond anybody's reach. I mean, even the people who are taking active part, they would not know what is going to happen tomorrow. So let's not bother too much about that. That is out of completely our thinking, our control. So where is our control? Our control is in buying the right stocks at right price. So that focus must not be left, because all these things are passing phase of geopolitical. Till yesterday we had both the wars going on. At least one war is now coming to halt. So let's look at the positives, rather than just being focused on to the negatives. At least I do that. I count more the positives rather than the negatives. So the negatives, and always there will be some positives, some negatives. But right now what I see is that first war is coming to an end. Second war, Mr. Trump is trying to bring to an end as early as possible. So I'm sure the focus will shift to the second war. So oil is at a very low price. Your credit flow has been unleashed. I mean, though it has not picked up to 13-14%, but I'm sure from here onwards the credit will also pick up. And I think the credit flow momentum is extremely important. If by chance the credit flow goes to 13-14%, don't worry about what is happening in the world. I think your economy is rocking, your corporates are rocking, corporate earnings will grow, and there is an ample wall of money waiting from the domestic retail, who will keep the what you call valuation at a current elevated level of 22, 23 times, and earnings will pick up. And that combination, I think, probably will give you 12 to 15% compounded return in the years to come. Now, what is the downside? In the sense that what would be the risk? The risk factor is the earnings not coming through. I would not be worried about anything else. But in aggregate, the impact of whatever government does, whatever we do, whatever the world does, I think earnings can be halting in the sense that earnings may not grow as desired by us. So that could be the biggest risk. And like what has happened in last 1 year, despite the earnings went up by 8-10%, markets remain flat. So there is a good correction and consolidation for last 1 year, and now the stage is set for a kind of a major upward move in the market, though it will start slowly. But I would think it will led by bank, I think, and banks in our country. I think I see definitely better times in the months and quarters ahead.
That's a good point, and you make reference to banks, and clearly some of the regulatory moves that we have seen should help champion that cause. Raamdeo, when we speak to foreign investors, they say that as far as their India outlook and investment sentiment is concerned, it boils down to a single variable, which is growth. You already commented on that, but I want to hear your thoughts on two specific variables. One, what is happening in the IT sector? It is shedding jobs. There is a technological shift underway, and many questions are being raised about our Indian IT companies, especially in the era of AI. How do you see these two developments, and what specifically do you forecast for the IT sector?
Yeah. So IT is very interesting. One is the listed space, another is unlisted space. Now the GCCs which are coming up, it is a bigger boom than what we have seen ever in life, I'm telling you. The kind of GCC movement is there, and the pace at which they are going to come, and the existing ones are going to expand, that will stun everybody, because there is an acute shortage of talented people, young talented engineers all over the world. And there is no better place than India to come and scout for it and get developed. Because in COVID, one thing was very clear, that you work from home, you work from next door, you work from the same city, or you work from some other country. It doesn't really matter. Now communication system is, I mean, whether you call from the next room or whether you call from India, it is one and the same thing. The pace of flow of data is also same. So my sense is now the world is going to become flat in terms of talent search, and people will go where the talent is available. First thing is talent is available, and second is at reasonable price. I think India's situation today in talent flow, talent is that AI trained young minds are maximum available in India, and it is available at a very reasonable price also. Actually, price is secondary, availability is more important. So I think that's going to be one of the big thing in the days to come. As far as the listed services companies are concerned, they are also going through the consolidation phase. They have to redesign their business model. They have been able to redesign many times. If you look back, whether it is 2000 discovery of web, whether it is ERP systems, then the development of web, then the development of cloud, and now we are talking about development of AI systems in the enterprises. Because enterprises cannot be run by just without any people. I mean, AI can of course give you productivity gains, but I think you still need a lot of people to run the enterprises. So my sense is that they are relevant, but right now they are headwinded in terms of their own revenue growth for some time. But that sector, which is about 14-15% of the economy in India, the listed IT space, that would remain, I think, in the slow track for some time to come.
All right. You know, I want to look at a recent investment that you made as well, along with Mr. Oswal, and that was $100 million in Zepto. I want to discuss this simply to understand, whether you're excited about quick commerce and if it's a larger strategic bet on India's digital consumption story. Do you see more investments when it comes to India's private market tech plays? And, once, Raamdeo, you had said that India's Nvidia could be a Zomato kind of company. So do you find that a digital platform with deeper consumer engagement could perhaps be the next leg of India's growth story?
Yeah, it will be one of the, see, India has been growing. It is the fastest growing. Let's understand, India is the fastest growing large economy in the world. So that I don't have to say that. It is happening. So clearly we are in a very sweet spot. Now with the digital within the economy itself, within your 7-8% growth, how exactly the consumer behavior changes? Like what happened? The value migration happened from public sector banks to private sector banks, from wired phone to wireless phone. Like that, the same domestic consumption of groceries is happening from a corner store to, first it went to modern retail, and now it is going to your quick commerce. And you know about better than anybody else what portion of your grocery is coming by way of quick commerce, you know. And so quick commerce is clearly right now, if I speak to a lot of companies, I have seen most of the companies, their of their entire scheme of things, total sales, 6 to 15%, 7 to 15% is already quick commerce, and that is gradually and very steadily growing in their pie. So clearly, the quick commerce component in the sales of all these grocery companies are increasing at a rapid pace. So I think it is a very interesting thing, and a lot of people who have a lot of purchasing power, like people like us, we have a lot of foregone consumption because things didn't have, we didn't have access to a lot of things. So you see a lot of innovative consumption. I mean, the consumptions which were foregone because of lack of access, lack of reach, will also happen. So I am quite optimistic about this particular sector. It is early time. They have not made money. They have only grown on top line and created some kind of a buzz and a franchise they have created. They have impacted the life of households. My sense is that over a period of time, the consultants say that they should make more money than modern retail. That's what they are saying. And again in internet, everything is consolidating. If in next 5-6 years the grocery consumption goes to about $1 trillion, and of that 25% goes to quick commerce, you are talking about $250 billion of pie between 3-4 of them. Who will be number one? Who will have 50% share? That is all you have to decide. But it looks a very interesting space, and I mean, investing is never certain. You always have, what do you call, some kind of odds. I think we have the odds in our favor, and as the growth picks up and as the profitability comes in, I think this sector has chance to become quite a big segment of the entire consumption basket in economy as well as in the stock market.
Ramdev, I want to take you back to the technology-led theme. This has been a idea that has taken global markets, particularly the United States, quite a bit into its hold, and there are already fears of a AI hype cycle. You mentioned NVIDIA. I wanted to understand, in terms of any new ideas in the technology space, should Indian investors be on the watch? Is there anything that they could look forward to in the coming 4, 8, 10, 12 quarters?
Yeah, see, technology is always, the forte of countries like developed countries, basically, more particularly America and all, America, Europe. They have been in the forefront of developing technologies. We have been followers as a poor country or developing country. So what is important in the stock market is not the technology. Please don't mix up stock market with the technology. Technology is for everybody to use. Internet is there. I mean, we have not invented internet. It doesn't mean that we would not be benefited by internet. We are fully, I mean, we are exploiting internet like nobody is this thing. Today, YouTube or Instagram, even in OpenAI, who is the largest subscriber? All Indians. So the technology is just, I mean, of course, there is a money in technology, but we are not in that frontier. So we don't have to worry about it. What we have to worry is how my corporate is benefited by this huge global innovation called AI. And I think India is the fastest adopter of AI. So let's not worry about we have lost the race of developing technology. Let those guys, they are competent in doing it. Let them do it. We are competent in using it. Let's use it to the best of its capability. The way we have gone about building up, digital public digital platforms And I think our public digital platform, we are way ahead of many countries. And here AI will further help building it, making it more intelligent, much more productive. So I would think that there is a bright side of it in terms of user potential. And I would not be worried that America has taken the lead or China has taken the lead in creating one DeepSeek or whatever, NVIDIA and all. I have to look at which are my corporates who are able to exploit the technology and grow the earnings. Because at a stock market level, I'm only worried about which company is going to grow. I mean, I don't care what is the underlying business, so long as it is going to be growing and becoming 10x, 100x, 1000x. That's my challenge.
So, let's take a look at the various sectors. We've seen some amount of rotation this year. You talked about banks as well. Which are the sectors you would like to focus on, apart from whatever we've already spoken about, that you see perhaps emerging as global leaders or really attractive investment opportunities going ahead? The must-own sectors, let's say, for the next 5 to 7 years.
Yeah, so as far as your viewers are concerned, there are two types of viewers. One, those who are picking stocks, and second, and 90%, 95% of them, they are the guys who are actually investing in the market through mutual funds. And that's the best way of doing it. Even I do 60-70% of my investing through mutual funds. So clearly the message is you don't worry too much about finding a sector and stock. I think that's a waste of time, particularly for the common man. I think what they should find is which are the best SIP counters, which are the best schemes where they should be investing, whether they should be buying active counters, active mutual funds in their SIP, or they should go for passive Nifty or 100, Bank Nifty or S&P 500, what they should put in. So that's more important than trying to focus on sectors and all. Sectors and stocks clearly are forte of fund managers, and it's in this fluid environment. A lot of things are changing very rapidly. You see, in last 1 month, the way government has unleashed the reforms through SEBI and RBI, the outlook for the banks, which are very, very, subdued, has suddenly brightened up. So a lot of these things will happen because government is on a front foot. They are just batting. They are saying that, boss, we are handicapped in terms of geopolitics. Let's use our biggest strength, which is the domestic consumption. So they are unleashing all the way, no holds bar. You look at GST cut in some from 28 to 18%, and in services like insurance and all from 18 to 0. I mean, these kind of changes have not happened in the past. It has been so big that we are literally stunned. So I think the good things will flow. It will take time. You'll see not the September result. In fact, September result will be impacted negatively. But December result, you'll see how the corporate earnings and performance comes. By the time it is December, you'll start getting to feel, even the corporates, they had a very subdued September, and now they are saying that, I spoke to some of them, they are saying that they have a massive pickup and it's picking up even more post Dashara and all. So I would think that December quarter, this quarter, current quarter will be very important to figure out which are the sectors from where winners are going to come, and how credit flow is going to positively impact the consumption, and which part of the consumption, whether services or particular goods, that will perk up. Because unless we see the data, we can't say where exactly things are. Because the government has made up to 12 lakhs rupees, which is 80-90% of the salaried people. Direct and indirect taxes both have been, direct tax is zero, indirect tax is also minimal. So how the consumption basket is going to get reshaped in the minds of the consumer, that only time will tell.
Absolutely. So after GST rationalization, and we're always greedy, of course, Raamdeo, what other low-hanging fruit kind of reforms do you think the government could prioritize to catalyze growth in the near term? I mean, this was such a long time coming, and as you said, it's going to be such a boost for consumption, for the market, for for GDP. What else can we possibly look forward to in terms of reforms?
I think our bureaucrats, if they are given free hand, they know it all. I met one of the senior officials in Jaipur or somewhere, Jodhpur, and just before the GST concession, he was saying that they are of the view that the GST should not be at 18, it should be at 15. So they know it all, how much should be the taxation. But I think what step which has been taken is fantastic. And I mean, whatever government has put a sight on, they will be able to do it because they have everything in their hand. So So I think reigniting the growth by a percentage or so should be possible, and they have done every. I think one of the key thing is the credit growth, and I think now they have gone about even unleashing the banking sector by giving a lot more freedom on acquisition financing. So and even ECB financing, and I think they will all have a huge impact as we go forward. And the corporates also, now the responsibility, the ball will come to the corporate once the consumption picks up. I'm sure the private sector will not disappoint anybody, and hence the private capex, which is being awaited for last 5, 7 years, they will come back with a bang starting 26, 27 or something like that.
Well, that's a significant point, and a quick follow-up before I ask you another question. Do you think this consumption boom could sustain? Because the question that some people are asking is that they were deferred purchasing in anticipation of the tax cut. People are purchasing, but they can't just increase their consumption because some items have gone down by a few percent in terms of their price.
No, it is like a 10, 12% salary hike. You see, what say insurance policy you are getting for 100 rupees was the insurance policy, and 18% was GST, so you are paying 118. Now you'll pay only 100. So you can buy a lot more, 18, 20% more premium, policy value you can buy. So, or, I mean, if you buy the same size policy, then actually premium will get reduced. So, how the consumer surplus which is going to be created because of entire change in the tax structure, it is for the consumer to figure out what they want to consume. Is the buying a Maruti at entry level car, is that the priority? Because roti, kapra, makan and gadi. So now my sense is that consumer, so the first trend, really how the consumer is behaving will be available by November, December. And December quarter, this quarter is going to be extremely important. And government has lot many more tools in their hand. And if they are set on unleashing the Indian economy and on the particular on consumption side, which was neglected for many years, I think sky is the limit because the consumption base is so large. I mean, and every percentage decrease penetrates much deeper onto the thick demographics. So I am very optimistic. I don't know. I might be sounding a little crazy, but I would wait for the December result to say
Not at
whether
all.
things are
Not
worked or
at all,
not.
Ramdev. Ramdev, in fact, you make a very solid point. I quickly want to pick up one more sector in terms of the government's focus, and this is defense production. We have seen several moves. Now, the quality of stocks in that space is, of course, what we know. But overall, in the medium term, what do you sense? Is there an opportunity in defense production that can peter down into the listed space beyond the stocks that are already present?
So defense is a very unique sector where I think Atmanirbharta is very important. And as you become even more dominant major economy, and you will become much more noticeable in the world economy. And at that point of time, you can't be dependent on some small country from Europe or here and there for buying plane or your armory or this thing. You have to be, I mean, majority. I mean, even if the technology is from outside, you have to produce within the country. So I think this is one of the biggest successful change of the policy by current government. So so my sense is that longer term opportunity is very large. The stocks have moved quite a bit, and hence the multiples are very high. And since the execution is bit lumpy, the market tends to give kind of a low multiple to the companies which have not a very what you call consumer like steady trend, and hence I would think that they could be pricey a little bit, but longer term I would be optimistic and rather bullish on all the monopolistic defense production companies.
All right, defense continues to be a big theme, of course. Raamdeo, FIs have been net sellers now in the last 9 of the 12 months, October 24 to September 25, cumulative outflows, as you know, of around 4.3 lakh crores. DIIs have infused nearly 7.6 lakh crores. How do you see the balance there shaping up between FI and domestic retail money, going ahead?
See, FIs have already been marginalized in incremental purchases. Their holding is very big. We cannot wish away. 17-18% of the market, which is about almost I would say 80-90 lakh crores of market cap is in their hand. So clearly you can't, or maybe even bigger. So so clearly they are very important component, and global capital is like much larger than what wealth base we have in India. So we will attract. See, but today we are in passing phase when after a long time, domestics are making a serious entry into the market. And this journey will continue for next 5 to 10 years till you become like a 500 million demat accounts. Right now we are at 205, 207 million. I think next 5, 6 years, it will be the flow of domestic money will be far bigger than whatever foreigners can bring. So and then what IPO market you are seeing today, I think it will become even bigger as we go forward. So I think it is one of the very interesting development in the capital markets, and I would think that the domestic flow will become even bigger as the economy comes to life. So the important thing is the regulators to see that our credit flow in the economy goes to more like 13-14% per annum, or maybe closer to 15%, and nominal GDP growth rate goes to more like 10-11%, with an inflation control to whatever mandated monetary policy, maybe 4 to 6%. So I would think that once that thing happens, the earnings will just explode, and once earnings explodes, even tax collection will go through the roof. So I'm visualizing these things happening, but everything doesn't happen as per my wishes. But I think the real freedom and real bullish story is the wall of money coming from the retail, and this is the real risk money. They are not going to go because there is some geopolitical problem or there is some earnings slowdown. They are not going to go away. They might become a little smaller, but they are here to stay, and that's going to take all the risk of the economy as the year passes by. The large money, which is very powerful, which is very big, they will be extremely opportunistic. Even HNIs are opportunistic. They will time the market, but not the SIP guys. So I think the real backbone of this market, actually this market is becoming much stronger. Look at today. Today is the day when actually the whole world is in turmoil, but India is standing like a rock. So I mean, so this is what is the real new India. Actually, it's a completely new India, new capital market, new wealth creating machine. So we have to be really guarding it well, and just because last 1 year has been a little subdued doesn't mean that the story is over. I think it is just creating a launching pad for the next 5 years of fantastic run.
Okay, launching pad for the next 5 years. As we wind down this conversation, um, you spoke about your wish. What would you suggest to all those Atmanirbhar investors? And you spoke about that number going to 500 million demat accounts at this stage. What kind of viewpoint should they go ahead with in the market?
I didn't get you. What you said? What kind of
What
caution?
what kind of wishes will you give to all those investors who are watching you this Diwali in terms of their strategy going ahead?
Yeah, so see, you have to be, see, the wealth creation requires a lot of patience. It doesn't happen in a hurry. All the big wealth, I mean, if you got to look at Buffett, Warren Buffett made his fortune of almost $1 trillion, but it took 65 years. You have to be part of the journey. It's a long journey, you know. So thousands of kilometers of journey. So, and you are walking. So you will go at about 15%. Every 5 years it doubles. So, so you have to keep contributing whatever you make 15, 16%, 17% from the market, and whatever little you can save additionally from your other income. So you have to create a compounding machine for yourself. And that's how wealth, I mean, the younger people who are in 25, 27, first job, they're getting very good salaries, they should start investing now, so that when they retire at the age of 60, 65, I think they will be multimillionaires. Some of them will be billionaires if they just stay with this. Because one thing you don't forget, India's story is one of the compounded stories, and there is this very unique story in the world. There are only two compounded stories: America and India. We are not America for sure. They are innovation machine, but we are no less in terms of consumption machine. And what potential of this country is, it's a one consolidated democracy. with a massive resilience. And now with the retail participation coming through, I think it depends on the managers of the economy to build what they want to build.
Super exciting outlook there. Raamdeo, thanks so much for joining us. Banks, consumption, the retail rush, we're only just getting started, and it's an all-new capital market that we're witnessing today. Raamdeo Agrawal, thank you so much for joining us, a veteran in the stock markets and somebody we look forward to speaking with every festive season. That's all from us for now. Thanks for watching. From overnight global cues to live